All right, hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. Thanks for joining once again. We are going to cover the tale of two markets. This was a very bifurcated trading week. There was a ton going on, and your mileage definitely varied this week depending on what you held, what you were trading, what you were trying to buy the dip in. It was a pretty eventful week. So we got lots of charts to look at. I've got a couple of brand new sort of themes, ideas, kind of rotation that I want to talk about, some of the things I was buying this week, and probably a whole lot more. So let's get into it here. Before all the good stuff, our sponsor that makes this show possible is Investors Business Daily. They've got 2 discounts for you in the description of this show. Check them out. IBD Digital and their Market Surge charting platform. We've got referral intro discount offers for you in the description of this show. So we're going to start with the Fed, right? And the Fed's expectations. So one of the things that happened this week was the government finally reopened, okay? And so hooray, the government's back to business, but we are now kind of learning and seeing and still figuring out what of the economic data is coming out, right? What's salvageable? What was missed? What surveys did not happen? And so this is obviously a key input for the Fed and their decisions. And that, coupled with some commentary out of the Fed, once again saying that they are very complacent, has brought the odds of a rate cut down pretty significantly in December, right? So if I pull out my trusty pen here, you can see that we are now basically 50-50 on moving on the December 10 meeting. Meanwhile, last week it was basically 67%, and a month ago it was 100% effectively priced in that we were going to get rate cuts. So this is now a new kind of, worry here for the market. Of course, this ping pong, this seesaw of expectations is nothing new. We get swings in sentiment here and expectations. So this could just be another swing to the left, but it's at least notable, and the market certainly sold off on it on, I believe that was Thursday. Now, tale of two markets, that's the theme of this week. This was the index returns. We'll actually have another slide of this soon. But, basically, if you were sticking around in the Dow or the S&P or the Qs, you had your, statement that you looked at the beginning of the week. At the end of the week, you just kind of shrug and you say, hey, nothing really happened. But there was things that happened. And I actually meant to put this slide first, which was CoreWeave really sort of popped a little bit of the balloon, the hot air that was in the balloon here for the AI, the whole stack, right? We'll just call it the whole stack, right? From data centers all the way up. But the key output here from CoreWeave on their earnings call was that they lowered their CapEx guidance for next year. And it was a pretty significant reduction. So I think they were guiding 20 billion plus, and that went down to 13 billion or 14 billion, somewhere down there. They kind of cut a third of it off. And it's not because there's a lack of demand. It's just quite literally they cannot build and get these buildings, these warehouses, let's call them, these factories that are just holding GPUs built on time and delivered without complications in supply chains and concrete and building materials. And so there is a backlog of demand. They just cannot fulfill it. And that is putting stress on, of course, the debt and the holding costs that a company like CoreWeave takes on, right? If we take a look at the stocks, some of the stocks, just a small sampling of the data center plays that were impacted this week and that were selling off aggressively. This is, also the hot momentum area of the market that has been getting marked up repeatedly here. And you saw declines of, 16 to 30% on the week. And some of these started to already sell off before coming into this week. So it was a very sort of painful area to be exposed to this week, which is all of the hot kind of momentum and really momentum as a factor, right? So AI, I think CoreWeave sort of popped that excitement that bubble out of that trade, but it's spilled over to lots of widely held other momentum stocks. Tesla, for instance, right? Seeing a pretty good unwind on Thursday. And, yes, of course, they're an AI stock, but not in that direct data center type of way. CoreWeave here, this chart actually was on Wednesday, so it did finish the week much lower. You can see the big volume coming in here, and basically just the market kind of punishing them right now, punishing Oracle, punishing a lot of these companies that we did talk about last week, Meta as well, that is aggressively spending right now, while these backlogs can potentially really throw a wrench in financing and credit quality. Now, big story for next week is going to be Nvidia. So Nvidia, again, talking about the AI trade and what it sees from its standpoint. Now, again, we are sort of separating out Nvidia, perhaps doesn't have GPUs aren't quite the bottleneck here, right? It's literally, getting these data centers powered up. That seems to be the bottleneck. But needless to say, Nvidia still had, roughly a 15% pullback. We talked about that one last week because we got this hammer that we discussed. And so this week we kind of popped up at the start, sold off, retested the lows from last Friday. So far it's held. We did learn that SoftBank, which held a pretty substantial equity stake here in Nvidia, was one of the big sellers recently, and I think clearing out all of their shares. So we know where some of that distribution came from. But I think bigger picture here, Nvidia, is hanging on to this 180 level. That would be, the best case scenario if we can hold up there. But really, if we can really stay above this 165 or so area, it's kind of range bound now back into this sideways level since the beginning or middle of summer. That's what we're going to be keying off of, but let's pay attention. Everyone will be, of course, dissecting every single word from this earnings report. Now, moving on to the actual performance here, again, you could see a mixed week for performance out of the indexes. The Russell 2000 was hit the hardest. S&P 500 again started strong, finished towards the lows, and it's a little choppy and messy here. This is kind of, volatility's coming in, and there's definitely some trading. We'll look at that in just a little bit. The VIX also going out the week above 20 or at 20, so there's more fear kind of back in here. The VIX has been a yo-yo between 16 and north of 20. And it really can't make up its mind. People are putting on hedges really quick. And so far, we are staying pretty bid into the weekend. It is a option expiration next week. So this is also leading to maybe some of the shenanigans we're seeing. Dollar index weakened up this week, but still kind of putting in a series of higher lows, and 10-year treasury yields are back up. So 4.15, we're again briefly above 4%. Did I say above? We were briefly below 4%. It didn't last long. We caught a bid back up, and now it looks like we're trying to put in kind of a higher low here and trying to move up. So that will be another pressure point for equities if we see rates continue to climb. Now, on the sector performance this week is a little bit of a changing of the guard, or certainly just making a more of a statement now, right? With some of the outperformance we saw in healthcare, some of these prior weeks, it was more so not quite a trend, but now I think the trend is kind of clearing up here, and it is to the upside. So healthcare, energy, materials, and to a lesser degree staples were your standouts this week. Discretionary, utilities, industrials were on the downside. There's two sectors in our smart trend filter indicator bullish state here. It's healthcare, it's energy. We're going to talk a lot more about those later in the video. And on the downside here, utilities, real estate, and communication services are on the bear side. Now again, tale of two markets here. If we look at market breadth, it really wasn't terrible this week. Again, I mean, we're still just in this muted phase where we're not really seeing big expansions either way. And so, basically it was a stalemate this week. We briefly had a decent surge or pickup in 52-week highs in the first 3 days of this week, but then it, slowly dried up, and then we saw a slight uptick here in 52-week lows. So I don't know, there's not too much to say about it. It's kind of just where it's been. In terms of the percentage of stocks above a 20 SMA, tried to improve, rolled over a little bit to the end of the week. And there is definitely some, hedging going on here, as indicated by the put to call ratio. Now, Bitcoin struggled this week is an understatement. We lost that key psychological $100,000 area. As I've been saying, most of this consolidation for weeks and months, 110 was kind of my big key line in the sand that I was using to demark sort of being bullish and being bearish or neutral on this market. And so ever since losing that, it's just now still in this series of lower lows, sentiments at pretty terrible levels in terms of the Bitcoin space. That's probably the biggest positive, but the price action has just been dismal here, back below 100K, accelerating lower. So there's definitely some work to do. There's a lot of fatigue in this space, and Bitcoin is now going through a 25% drawdown from its highs here, right? So you can see we're kind of coming back into not quite towards the April levels. This is looking at IBIT, but this is still a pretty good hit here for, again, sentiment and drawdown. And if you look at this chart, I mean, this is since IBIT has been actively trading back in Jan of 24. Bitcoin has spent quite a long time in drawdown here, right? It just can't really sustain any type of positive trend. And so, we'll see if that can if this can result in some capitulation here soon. Right now, I still haven't seen it. And MSTR, right? So this is the biggest Bitcoin treasury company, own over 600,000 Bitcoin. This is the same time period going back, or actually, yeah, so slightly different time period though, just because Bitcoin wasn't trading at this point. But since November of 2022, this is now the steepest drawdown that MSTR has been in. It's been in bigger in the past, but in the past few years, this is the largest at almost 60% down. So there's plenty of pain here in the space, and you can look at Ethereum and Solana and Sui and go right down the list to your favorite kind of altcoin. They're all getting hit pretty well this week. Now, econ events, we'll see what comes back next week, but we are going to start to ramp up, I think, and we've got FOMC. So Fed commentary is very important to this market right now, and we're going to get some more of that as we move along here. So I'm going to quickly hit pause. We got plenty of charts we're going to look at, so stick around. Okay, so we've got the TC2000 open here. We've got a lot of different charts. I'm going to try and remember everything I want to get to in this video chart section, but I want to start here. This was a little surprising to me, right? This is a view here of the S&P, the Qs, and the Russell, and we're looking at 1 month. Let's look at the lows, because that's all I really care about at this point in time, the percentage of stocks making 1 month lows. And we didn't get any type of big uptick here, right? Which again speaks to this theme of a tale of two markets, right? The selling and the intensity that we saw this week was really concentrated in the momentum factor and in the AI trade. And so when we look here at the percentage of stocks on Thursday or Friday in the Russell or the Nasdaq, I mean, you're at nowhere close to sort of like a washout short-term low level, right? The majority of stocks did not feel that selling. And so I think that's an important point, because it's, retail, I think, got hit hard this week just because of the stocks that they usually have been trafficking in. But the broad market itself is clearly not in any type of stretched oversold condition. So when we look at the S&P 500, it's not stretched to the downside, but it's getting a lot more messy, right? It's just kind of now really slugging sideways and really just having a difficult time asserting any type of meaningful trend. So when we look at where we are now, we did just get 2 days of heavier volume, so that's notable on Thursday and Friday, of course. And if we start to, really kind of pay attention to these swing high and low points, you can kind of see though that we're really not doing a whole lot here in terms of, again, making progress or having any type of good directional certainty here. And so I think that's causing some frustration. And it's also, though, leading to rotation, which is what I want to talk about in just a little bit. So for the S&P 500, look, this is vulnerable for sure under Friday's lows. If we come into next week with an ugly gap down and we start taking out 663 or so, then it does feel like there's a pretty quick air pocket. We've got a small line of defense here, and I say small because we've tested this area already 3 times, 4 times. And so I would be concerned to go down and test that a 5th time and expect it to hold. So I would say this area here, this 663 is a very important line in the sand here for the short and intermediate term traders. I think if we break that, then I do think we would end up breaking 653, which could lead to a little bit of an air pocket here going into the holidays. And so again, I'm not saying that that is the path of least resistance and that it's likely to happen, but I'm pointing out that if we do start to lose this level, then I think, we want to sort of take the risk management steps accordingly. Nasdaq 100, again, really kind of holding on to the past Friday's lows, going to try and create a double bottom here. And again, I think this is an important zone because similar comments apply. If we have to come down and test 590 again, I'm not so certain that it's going to hold. So generally speaking, my assumption is if we've got FOMC next week and we have Nvidia earnings that are coming out on Wednesday, I believe, the 19th, then that's going to be the sort of, deciding factor as to how this market really, handles this area. So I think that's what I'd be watching. And the Russell 2000, again, kind of in its own universe here. It's 3rd week down in a row. It's already below that level or testing it right now. So back from the big sell-off on October the 10th. And so the Russell 2000 is kind of doing its own thing right now. And, looks to be in a tough spot just with a series of lower lows, lower highs that are already getting carved out there. So that's kind of the big read there. If we go through some of the other major markets, GLD gold had a nice recovery week or had a push up. So again, this pulled back about 10%, went sideways for 2 weeks, then it popped up. It definitely lost some momentum here on Friday, but generally speaking, still glass half full for me. I think 361 or so is going to be an important spot. I don't want to see it kind of roll back over and test that aggressively. Still have pretty oversized positions here in GLD. Generally speaking, oil getting a little bit of some volatility this week, but trying to pop on Friday to the upside 2%. And so I think oil's at an interesting spot. And very specifically, I want to start to call out some of these rotation areas that I'm looking at and took some trades in. And XLE, I cannot remember the last time I bought XLE. It has been a very long time, but I think it's with the volume that we see here specifically, the rotation and the stand that it made on Friday, the resiliency on Thursday, it feels like something's cooking here with XLE. And again, it's gone absolutely nowhere for multiple months, and oil's trying to push on Friday. So again, this has been basically a place where trends die. It has been very difficult to get any meaningful, trend in XLE, but you can see it's just at the top end of this range now. It's trying to push above it. The volume's starting to come in. It's showing some relative strength. So for all of those reasons, and maybe on the AI kind of stack, we're going to trickle down into the greatest common denominator of some of these refiners and suppliers of oil and drillers. And so maybe we can get some type of push here. So I did some buying for XLE, took a decent size position, but it's not, it's not a big, tremendous growth area. Healthcare. So healthcare is another place I want to talk about, because this now, like I say, is becoming a trend, right? I think we had this push up and this consolidation sideways where we were still kind of thinking, well, let's just see how this all shakes out. Let's see if this can get another push. And it pushed this week, right? So, throughout the week, it just came into the week basically rallying, getting some strong follow through, and then really just was resilient throughout the rest of the week. It's certainly stretched in the short term, but XLV healthcare is getting a bid here. There's lots of talks now where we're starting to trickle down into some of the benefactors of perhaps the output of a lot of these AI models. And so healthcare is a bright spot here. This is one of the core positions in our Galahad trading system. So it naturally had a pretty good buoying effect on Galahad this week. And I think this is an interesting spot to pay attention to. And you don't have to be super low beta land. You can move into something like Biotech, right? Which has also been in very much a stealth rally throughout this whole time, right? This looks different than XLV for sure. I mean, this is the weekly chart of IBB. It's been in this, kind of perfect channel. And in fact, it's now accelerating, and look at the volume that came in this week, $2.5 billion of dollar volume in IBB. But if you look at XBI, same exact thing, slightly different pattern. There's more stocks in the XBI, but this is a decent base here of, kind of consolidation. It's not super extended, but it's had a good run. Both of these spots, I did some buying this week in biotech specifically, sort of adding into this area of the market. So I think this is a place to pay attention to. If you look at IBB, we're going to go really zoomed out here, but if you look at it on a yearly chart, this is each bar representing 1 year. And so biotech really hasn't done a whole lot as an index. You can see it's been kind of sleeping here, consolidating, had a big move in the 2010s, then it went sideways. If we're starting to break out and we're starting to clear to new all-time highs, you could have some good runway here, especially as a lot of these breakout drugs and research labs start to, really get powered up with some of the agentic tools. So I think biotech is interesting, and healthcare, just to a broader category, is, speaks for itself in terms of its price action. Now, I want to bring your attention to how you can sort of think about the more pointed ideas. Galahad, like I say, has a kind of a core position in XLV, so it had a good week. Again, tale of two markets. Our Galahad portfolio finished the week green this week, right? And so again, it's just depends on where you were invested, and if you were slinging around a lot of the more speculative names or the momentum names, then a green week or a flat week would be a miracle. Now, in terms of our Quant Rockets momentum dashboard, the way we can think about this is if we identify biotech or healthcare and energy as some of our spots we want to pay attention to, well, then we can go down into our list. I've curated just 2 of these names. I didn't actually get a chance to update the list for Friday yet. I'll do that after I record. But there's 2 names that have been on our list here. Actually, in real time, I'll see if I can get the actual chart up, but INSM. So this is one that we've been in now for a couple of weeks, and it's pretty extended. So again, it's, buyer beware, but it's something that our model likes, and it's definitely something that moves pretty aggressively. It's been consolidating sideways. Again, do your homework on this, especially when it comes to biotech and trials and anything else. But INSM is one that, our model has been in now for some time. And NTRA, which I'll see if I can get this one up as well, is another name kind of in the healthcare space. And so again, this one's been on for 24 days, up approximately 17% in the stock right now. Let's see if I can pull that one back up here. So you can see this one, again, not so extended. It's got a nice trend. It's already sort of left the base here. It's at all-time highs. Got a big sideways range. So again, if you're looking for kind of the leading kind of higher beta names, this is the way you can sort of drill, use some top-down sector analysis and then drill down on some of the specific ideas that our Rockets dashboard is showing us. So that is, I think, the majority of what I wanted to discuss today. I mean, it's basically a rotation week. I think if you start to look at some of these other plays, right, if you go down to like the iron and you throw on Bollinger Bands, for instance, this is what's interesting is so this was a stock on our Rockets model, and we sold it on the open Thursday, so 52.68. So actually, let's use this as a quick, I guess, education example here, because I think it's illustrative of, I don't know if the trade closed yet. Yeah, so I'm not going to be able to pull it up yet because it hasn't processed through our closing trade. But, you know, this was a trend that basically we were in for a while, and it sold out of it, finally hit the exit point, pulled the ripcord on the open. And so, you know, you have to ask yourself now, if you're looking to kind of dip buy this, because I see a lot of folks wanting to like buy the pullback here, and it could very well turn out to be a very profitable, good trade. But your duration needs to match what you're trying to achieve here, right? I mean, if you're okay with something like this, you know, going sideways for a couple more months and then breaking out or having rotation or continued trend continuation into next year, for instance, then this could absolutely be good, you know, DCAing prices. But if you're a momentum trader, this has lost a pretty good amount of you know, medium term kind of support that you'd want to see hold. I think especially again as a, you know, a trader, you would have preferred to see this hold above the 50 level. And again, we could be there tomorrow and this could just have a very quick rip back. But you do need to just have that plan in place and have some discipline and know your time frame if you're trying to come back in here and dip buy and look for these opportunities. So yes, it is stretched. Yes, it's oversold. Yes, you could easily get a snapback here in lots of the stocks. I'm just using iron as the example because it seems to be the most popular, but insert any of these other data center names. What happens if you get a 2-day rally? Do they sell into it? Like the follow-in action is what you're going to want to pay attention to. But no doubt, right? No doubt a 8-day 41% pullback is pretty extreme, right? So that definitely washed out some of the froth there in these markets, and we'll see how long it takes for them to recover themselves. So I think that's kind of it. You know, the only other comment I would say, so iron doesn't really have this showing, but if I looked at something like an Oracle, which again, very oversold, there were a lot of these stocks at the opening print of the day on Friday was the lows, right? And so you have a lot of potential short-term reference points you could trade against if you're very tactical and you're trying to catch these reversals or bottoms. Because Friday could have been, you know, some type of exhaustion here on the sell side, at least in the short term. And maybe we do get a couple of day bounce next week, especially into OPEX. If the selling doesn't get worse, then you've got some naturally supportive sort of buyback flows that are coming in from dealers. So, you know, you could easily get a nice recovery next week. But again, just like in the S&P 500 or the Nasdaq, if these lows from Friday break and give way, I would want to be very cautious buying the dip in those specific stocks, right? I would much rather just be looking at some of these other sectors like biotech and energy right now, just to see how those fare, even if they are a little bit low beta. So that's it. That's what I've got. Busy week out there. Hope you did well. Hope you managed to survive okay. Plenty of things to do homework on this week and look through some of the carnage and see where the opportunity lies for next week. Don't forget Nvidia earnings. Don't forget to check back on the website because we're going to be running a sale starting sometime next week. If you're not on our newsletter list, do that as well this weekend, and then check out some of those other links in the description of this video. So that's it for me. Thanks as always. Hope you have a great weekend. We'll see you back here next Friday.